All right, so I don't really get to record um, some recaps as much because I don't have the time. Once the bell hits 4 o'clock, I have some other chores I've got to do. So I thought I'd just do one really brief, quick one today. Um, I typically, whenever I have um, an FOMC minutes day or whatever day, one of those FOMC days, I always draw a line here around, well, I normally put it at 145. So I stopped trading around about here, or rather, I was not looking for any trades. Um, let me. I only took. I took a bit more than this, but on this account, I took this, um, and on this other account, I sort of caught some other ones here. Um, I mean, I might as well just show this one. So basically, went short here, sell the close, two bear bars. Actually, before I even go there, let me actually talk about the plan. So basically, the market, as you know, market cycle, breakout, pullback, three pushes, one, two, three, and then the market's going to try and test this low. And it's literally what's happened here in two legs. So we're now in the trading range, and we opened here. So part of me thought we were going to come back to the moving average. At least this is a 20K tick chart. I thought we were going to come back to the moving average and then sell off. But instead, we just started to sell off straight away. So the setup I normally use is first bar was a doji, and then we now had an inside bar. So I thought, okay, this is small trading range here. Let's see what the next bar is. I'm only going to sell this bar if this bar is remarkably big, which it was. It was, I mean, twice the size of this range. And in fact, let's see if we do the measured move. No, it didn't actually do anything. But anyway, it wasn't twice the size, but it's big enough. So I thought, okay, do you know what? I could go short here, put a stop here. Typically I was going to go for 10 points. I think, yeah, it kind of only went for 10 points. So if I went short here, that was really my target. I also had a target based on this level here. So this was my other target, and I also had a target based on this day's low, this particular Wednesday 26th low, because this was the last swing, one of the last swings before we made a new high. Yeah, this is the last swing before we made a new high, because this was the last high before we made a swing down. So that for me was a very good target for the bears. They need to break this low to convert the market into a trading range. And then this level two, because we came down here, actually no, this is the swing level. Because if you think about it, we closed here, we went down, and then we went up, the Globex low. So this is the target. So that was my target as well. So anyway, so going short here with a stop, delete. Oh, I don't know which is which. Okay, yeah, I'll get rid of that. Going short here with a stop above at least this bar. At least I'm going here for 1 to 1. I also trade an NQ as well. I am NQ. So I went in the same trade, but I had a lot of confusion on my MNQ trade, only just because um, I didn't like the price action. What I mean by didn't like, it was conflicting, and I thought, okay, I'm putting on too much risk at the open. I'm risking the same amount on two instruments. If I can bring out, you know what I can do? I can do this. Right, so yeah, so the initial, this is me kind of being silly, but anyway, so I initially went short here because I went short on ES, and I thought I should have gotten short here. But then when I looked at how much I was risking for that trade, I thought I'm putting on too much risk for the size of the account. So I was risking about 100 and something bucks on this one, and I was risking 100 on the other, and I thought, okay, that's just way too much. Yeah, 126. So when it started to pull back, and I just thought, okay, do you know what? I don't really like the fact that we have a bull bar here, we have a strong close here, and then we have a doji. So I thought chances are we're going to go above. We could go back up, test the highs. I just thought, you know what, just get out. No need to, do anything. And eventually I actually did go short again when I was convinced that, okay, we had a triangle here. We broke out. And I thought, okay, if anything, we're probably going to test this. Look, we did and went short. Don't know why I bought here. But anyway, went short again and got out here for 50 points, about 50 points. Um, Again, oh, and also the reason why I went short here was I had a better place to put my stop. I think it was up here or here, one of these places. And I thought I'd rather put a stop here, knowing that we're already in shorts. There's less risk for the kind of reward I'm after. Um, and then this one I was very comfortable with. However, I did get out of it because of the of what I was doing on MNQ. Now, whenever I find myself fumbling, and I mean fumbling in the sense that if I'm not convinced by a trade on I'm trading two instruments, that can lead to confusion. And as a result of that, I ended up getting out here. And I was like, no, stick to this trade. This looks like a small pullback bear trend in the making. Bet that the wedges are going to fail. Because I was a bit confused at that point. I thought, okay, this is a wedge. One, two, three. We're probably going to reverse. But I was like, no, if it's a bear trend from the open, that wedge will fail. And that's exactly what happened. We got a breakout here, went sideways, another breakout. Got a bit more than 10 points, actually about 12 points. But this target was literally somewhere, hang on, where was it? So at the bottom of that bar. So it was, yeah, somewhere around here. So I decided, you know what, I've already hit my target. I'm probably being greedy. Let's just get out. So I got out there and I was quite happy. Then I decided to trade one account um, and started doing some silly things. I went away, came back. I saw this and I was like, great short. However, I had a problem with this short. Again, confusion looking at MNQ. I didn't like the fact that we had so many bull bars here. It was a wedge, and we're probably in a trading range. So, um, because we're in a trading range, and what I mean by that is this is a leg up, this is a leg down, a big, massive trading range. I just kind of thought, well, if we're in a trading range, chances are we are probably going to try and test up. So we're probably going to pull back. And we didn't actually pull back. We ended up doing that here. This is the first leg, pull back, second leg. I mark these levels at the open. Essentially, why these levels are important to me are because these are swing levels in the trading range. One push, this is the second push, third push. So I imagine the market is going to try and get to these levels. So anyway, so this was the first target that we achieved. I didn't actually trade it to this target because of the FOMC. I don't trade the FOMC just as a rule. Just not my thing. The risk is just so high. Um, and yeah, not really worth it. Where was it now? Yeah, so anyway, so did that, was quite happy. Got back, went out for a break, got back, took a short here, and I was confused because I was looking at another chart. Really should not be doing that, but I did that. So I didn't like how many bull bars were here to be going short, and so went short, then went long. And a lot of confusion here, as you can see, confusion, and that confusion led to me now scalping. And that's something I should control. Essentially, I allowed myself get let the trading. I wasn't trading a good setup, and I let the losses get to me. So essentially, I was just taking like paper cuts, paper cuts. So you had a wedge forming here, a breakout, a pullback, one, two, three. I should have gone short here, but at this point, I'd already made back all the losses because I was just scalping. I actually went to short here and really good short here because I was like two legs up, probably a two-legged correction. Although look at how strong this is. So I really should really have expected, unless this was coming racing down. The market did give me an opportunity to exit, but I was sticking to my beliefs, and I got stopped out here. Essentially, I went short here, added on this short here. It says I may have scaled out and went short again, and then got stopped out, and then just went long from this point on. On MES, I may have done the same thing. Um, yeah, I went short and I got out, and then I'm quite disappointed because this actually went all the way down to the low of day, and then yeah, same old thing. I did consider going short below this bar here, which is why I've marked it. Um, but then I just thought, okay, I'm done. It's still part of the FOMC trend. Um, the red dot is coming soon. Probably not good for me to take the trade. And the bars are getting too big for me to be risking if I take a short here, this is a low probability setup. Therefore, I have to go for 1 to 2. And if I was doing that, selling that breakout there with a stop there, I would still be in the trade because my target would be somewhere here. And I probably only risk one contract, so I would only risk about 50 bucks to try and make maybe about 100 or something, and that would be the trade on that one. Yeah, so the way I like to trade these accounts is I generally just go for simple $100 risk, and I try and make $100 in each trade. Sometimes, if it's 1 to 2, I make $200 in a trade. May not seem like much, but that's literally how I trade these accounts because they don't have a lot. We're about to test the open of the year. They don't have a lot of room. Like this particular account only has $2,000 of risk. This is a take profit account. I don't know how people do it where they trade like minis on this account. It's just not in my stomach to do it. Yeah, so I risk about 100 bucks, and I still think 100 is a lot, given the fact that you only have $2,000. All right, but anyway, so yeah, looking at this day, it's an FOMC minutes day, so it's in two parts. You have the first part of the day, and then the second part, which is like two separate days. We tested the highs. Um, we went down, went sideways, formed this triangle, had a failed breakout of the triangle, then went sideways, and then went up for a second leg. So maybe it wasn't so much a failed breakout, but it was a so it was two legs down, two legs up, three pushes up. So you could argue this is the wedge top, and then a double top, and then when I went down, broke the low of the trading range, and then when I had a wedge, and then went higher, so it's like 1, 2, and so it's a wedge in itself, so maybe 1, 2, 3. But this wedge failed to reverse. It was a bull trap, as you can see, double top bull trap, so therefore we're going down for a measured move. So possibly, let's see, probably even go lower. I don't think we'll get there today because we only have 3 more bars, this one and 2 more. So I don't think we're going to get to this point. But still a good short if you saw this as a bull trap and then just held it. The moment you got here, you can just hold this. As you can see, everyone gave up over here because they saw it as a bull trap. And you have a two-legged correction here, 1, 2. It's not a great signal bar 72 to go short, but you could go short here, maybe go for, I think I already did. You know, those who sold this close would have put their stop up here. They probably get out around here. So it makes sense why you have a doji here. All right, so yeah, that's my recap for today. Again, like I said, I don't do very many of these things like I used to. Instead, like I said, I just do these instead, and I just post this on Instagram. Yeah, if there's any comments about anything, yeah, just holler.